Welcome back to the TaxTron support channel. In our previous video, we covered the basics of the Lifetime Capital Gains Deduction, LCGD, for qualified small business corporation, QSBC, shares. Today, we will dive into a specific scenario and guide you on how to report it using TaxTron Web. Let's walk through a real-life example that will help explain the three key factors in calculating the deduction: the cumulative gains limit, capital gain deduction available, and the annual gains limit. For this example, Alex, a small business owner who sold QSBC shares in 2024. Over the years, Alex has experienced both capital gains and losses, and has already used portions of the Lifetime Capital Gains Deduction. We will show you exactly how these three factors influence Alex's capital gains deduction and how to report it step by step using TaxTron Web. First, log into TaxTron Web and navigate to your tax return. Go to the T1 Clients section and either select an existing client or create a new return. Ensure that the Personal Information section under Identification is completed accurately, then click Next. Next, we will report the T4 for Alex, which will help you better understand this example with some income values. Navigate to the Income tab and locate the Profile tab. You will need to answer yes to the question, "Did you work in 2023?" Checkmark the box for T4, and scroll down to answer the question, "Did you receive income from investments, shares, property, or claiming reserves?" Since Alex also sold T5008 securities, from which he gained. Checkmark the box for T5008 and click Next. After clicking Next, you will arrive at the "Did you sell shares or property?" page. Answer yes to "Did you sell qualified small business corporation shares?" and then click Next again. On the next page, you will land on the T4 section. Enter $45,800 in Box 14 and $3,200 for tax deducted in Box 22. Complete the rest of the T4 as shown in the video. As you can see, this person owes $2,917.84. Next, you will land on the T5008 section, where Alex sold securities for $50,000 that he purchased for $100,000, resulting in a $50,000 loss for Alex. Now we will report the sale of small business shares. Click Next, and you will land on the Qualified Small Business Corporation Shares, S3, section. Completed as shown in the video, with proceeds of disposition, sale price, being $600,000 and adjusted cost base, original price, being $300,000, resulting in a total capital gain of $300,000. Now, let's assume that we have completed the tax return. So let's navigate to Review and File and download the record keeping of this tax return, and let's scroll down to Schedule 3, where you can see the QSBC capital gain of $300,000 on line 10700. You will also see a $50,000 loss from publicly traded shares, mutual fund units, deferral of eligible small business corporation shares, and other shares, on line 13200, which in our case is from the T5008 securities. So in Alex's case, $300,000 minus $50,000 divided by 2 equals $125,000. Will be taxable gain and will be reported on line number 12700. Let's go back T657, Calculation of Capital Gains Deduction, where you can see Alex's annual gains limit for 2023 is $125,000. If you scroll down a bit further in Part 2, you can see the calculation of Alex's cumulative gains limit is $75,000. Next, for the capital gain deduction available, scroll down to Part 3C, calculating your capital gains deduction on qualified farm or fishing property, which is shown as $150,000. Now we will compare the three factors. Cumulative gains limit equals $75,000. Capital gain deduction available equals $150,000. Annual gains limit equals $125,000. As discussed before, the capital gain deduction will be based on the least of these three numbers, which is $75,000, and this amount will be reported on line 25400. That's it for today. I hope this helped clarify how the capital gain deduction works and what factors can limit it. Thank you for watching.